right, hello there, traders. Hello there, welcome back to TOGS Trading Podcast, TOGS 51. Lessons hurt, okay? How to handle them like a pro. I think it's fair to say that every trader knows the sting of a losing trade. It's inevitable, it's part of the game, but it doesn't have to be destructive. And how you handle losses defines your longevity and your consistency. So in today's episode, myself and Ian will explore the psychology of loss, why self-compassion matters, and how a structured review process can turn setbacks into progress. As always, okay, I'm joined from Dublin by Big Ian there. Looking good, Billy Ray. How are you doing?
Thank you very much. Actually, I was just thinking there, I was looking at it, starting to look a bit more like King Leopold of Belgium. Okay,
There
maybe
you
a
go.
good Halloween costume. I can't actually think of a better Halloween costume.
I have no idea what King Leopold looks like,
He is
whether he's alive or
he
whether
looks
he's
like
a.
me, but with shorter hair. He just has
Oh, right, okay,
he just has
right. Well, there you go.
yeah, it's the big beard. I was just looking at.
Maybe
It's
you need to be
exactly,
spending more time in Belgium. So yeah, there you
or
go.
maybe, altogether, he was a horrible man anyway. King
Oh,
Leopold.
right. Oh,
He
right.
was the
Fair
guy.
enough.
He is the guy who did all the stuff in the Congo. You know, the chopping the
Oh,
hands off.
oh,
That
right.
was him.
Oh, right. Did he look like you? All right. Well, there you go. Every day's a school day. You live and learn. Ian. You live and learn.
Mhm.
So, how you be doing other than your spending your week looking for your doppelgangers?
Right.
How's
Yeah.
the rest of your week been?
It's been all right, actually. Good. Well, because we were just having a big wine fest. Well, I was having a big wine fest just before we came on about life in general, about
Is it
trading.
your house, isn't it, Ian?
Yeah, I paid for this damn house. It's my house. I can say what I want sometimes.
Oh,
So anyway, what was I going to say? And well, I was doing a thing where I was trying to. As you said, since you know me, I've been trying to do longer term day trades and not just scalp all the time. And so I something clicked, and I started doing that yesterday, and but I found it really weird because I went into a trade, followed my plan, exactly followed my plan. There was no problem with that, up to a point, and then I had to leave the room because it's a really good trade. That makes your day. And then it was I knew it was going to pull back at some stage. I'd have to sit through the pullback, and I just left the room. I mean, I had my stops and my target in, and I just left the room. I eventually actually got stopped out. The last 8 times that same setup appeared, I just did a quick calculation yesterday. With the last 8 times, it worked perfectly, and the ninth time yesterday, it didn't work
there you
at
go.
all.
Welcome to trading. Mhm.
Yes, yeah. So anyway, I'm going to do it again. I think I'm going to try and stick at it this time and do because the trade itself actually worked, as in it went to the target. It just pierced the support, and I couldn't stay in it. It went too far. I mean, I can stand a wick through support, but I can't stand through price establishing under support.
Right.
And it went through, and then it reversed back up again, and it went straight up to target overnight, and that was 111 points, which is nice, and that's what I'd rather be doing because there's actually less work in it. It leaves more times for watching documentaries on King Leopold on YouTube. So
Whilst drinking wine. Sounds
yeah,
like a pretty good afternoon, that, to be fair.
yeah, it was. So they're doing it, but I do find it one of the hardest things. And I think it's a real trait. It's a personality thing for myself that I don't like to sit still. I drive very fast, and
Yeah, we know.
I do everything very fast. Yeah, so I tend to be that. That just tends to be my
That's
way
um,
of being.
that's your
What's
uh,
that?
that's your workaholism coming out, isn't it? You can't sit still.
Yeah,
You need to feel as if you're doing something and stuff and whatever. But we've
yeah,
discussed this
can't
many, many times over many, many
yeah,
pints over
yeah,
over many, many years and
yeah,
stuff. It's it's
can't
part
sit
of
still doing.
yeah, it's part of your nature. So all right. So losses hurt. I think we all know that. What are your own thoughts on losses and how you go about handling them?
Well, the first thing is that they're inevitable.
Yeah,
That's the sort of thing. I mean, they're to think that you're not going to have a loss is the same as a boxer going into a ring and think he's not going to get smacked in the face.
exactly.
Because you're in a fight for money with other people. That's what you're doing. That's what trading is. So they are going to eventually, some stages, they're going to hit you back. They can come in clusters, and that's a
Oh,
problem with, yeah, because even if you have a great system, if you have, we say, you have a 70% success rate with your trades, which is a good success rate. And I think it's fair actually, because I remember the time I did 82 or 83%, and I wasn't making any money because I wasn't taking on risk. But you could have seven trades win in a row, happy days. Your three trades come, and then the next three trades off the next system. So you have seven wins, six losses.
10, yeah.
So that can happen. They come in clusters, and they come in clusters as well because action, some of my setups work really well in uptrends, and they don't work so well in downtrends. In fact, downtrends are the worst performing for me. Even chop is better than downtrends. As a scalper, chop is beautiful. I love a certain size of chop. It works out quite well. It's not the losses themselves that kill you, it's the size of your losses. So, risk control type thing, but I'm sure we'll talk about more later. Um, you often see as well with these sort of outsized trades that a lot of the time are risks that great traders taking big risks and suffering big losses occasionally. Um, that's coming at the end of thousands of trades. These people have practiced for years and years and years. They have taken a calculated risk. They are not starting on day one, pumping in and losing loads of money. They just don't do that. Losses always hurt.
Yeah.
Even me, I'm in this game for a long, long time, and losses still hurt. And that's why you have a max loss during a day. So for some traders, it's a figure. For some other traders, it's a number of trades that they lose, because the pain is cumulative. And then it gets to a certain point, and then it starts to affect you. And what can happen with that is you go on what I call a spiral, like basically where you start throwing. You don't want to feel the pain. So the only way out of feeling the pain is to make some money. The only way to make some money is to trade. So you're forcing trades, and you're just going and going and going. You lose your connection with the market. I think young people call it a tilt or something, but that's what they're. And the last thing I say about that is that there's two types of losses only really in the market. There are planned losses, which are fine. So you followed your plan. I had one yesterday. I had a 15-point planned loss because I did a trade yesterday. It came down to support. It went through support. I got out of it. Then the next step after it breaks that support is that's a trend change for me for the day. So I naturally went and shorted it, and it reversed dramatically. It went back up. It was really a bizarre day, I think, for my system. It wasn't a winner. So you have the plan losses. So plan losses are fine because there's no threat to plan losses. But unplanned losses are scary because it's your fault. If there's something that's with your fault. And then if I have an unplanned loss, which does happen occasionally, and it's not technology based, or there isn't something like a flash crash, which is outside of your control, there's always a thought or a feeling somewhere that led to you making that stupid mistake. So the next job is to track it down.
Yeah.
And that's self-awareness, really.
Yeah.
So it is.
Yeah, no, no, all great points and stuff. You're absolutely right. Losses are inevitable. Clusters of losses are inevitable. Even if you have a high hit rate, 7%, all right, you will have clusters of losses, and it's amazing how much they happen more than the stats would tell you they do. It's a weird experience, but it's part of the game. Welcome to trading, and it's as I try to tell people, it is about have losses that steer you rather than sink you. As you said, there's things like flash crashes and stuff. They happen, all right. We've just sort of it wasn't well. You might say it was a planned flash crash on Friday. Okay, if that Trump et al. Knew what kind of would happen when he made those kind of comments and stuff. But basically, the technology, especially on the crypto side, what that actually did and how it basically how it ran amok, shall we say, absolutely smashed some people. But it just comes back to that kind of message we have been banging on, well, for years and since the first, podcast, namely that, if you are not managing risk, you are roadkill. It is as simple as that, because at some point you'll get steamrolled and run over if you're not managing risk. You'll get away with it for a bit. You'll start to think you're Billy Big Bollocks, all right. You'll start to think that you're a legend in your own lunchtime, and invariably, pride comes before a fall, and invariably it's a pretty difficult fall. And so, as you said, you're absolutely right. Planned losses, they should be part of your business. I mean, I talk about not even calling them losses. It's just a business expense. All right, you're running a business. It is just a business expense. Anything that can help you take the emotion out of it, sort of destigmatize it, because losses do hurt. Yeah, you're right. Losses do hurt, whether you've been trading for 2 months or 2 decades. But with experience, as you say, you start to realize, when there are just events that are just general business expenses, and those that are unplanned because of flash crash, or quite often like tech issues. Um, or maybe it be a tech, it might just be fat finger, or some other reason happens, and that is why you manage risk, so that so that if there is a problem, you live to fight another day. Rule number one, all right, banging on about it all the time. You should always be looking to live to fight another day. Your trading career should never ever come down to one trade or one day. And you are right in that. I sort of suggest that you have a kind of three strikes and you're out. And if you're going to be intraday trading and scalping, if you've got three consecutive losing trades, stop for the day. Right, you are not in alignment with the market, even if they were perfect trades in terms of you plan the trade plan, manage the risk. If you're an intraday trade and you've had three losing trades in the trot, just stop, because that prevents you from going on a revenge spiral. It prevents you from going tilt, from going a bit Colonel Kurtz and just like losing it. And then I see so many traders in the start of their trading careers. They say, I've had three losses, but I can make it back. I can make it back. And then, you look at their trade journal and the three losses have become like 10, 12, 15 losses. Also, the size of their position increases because they get into almost like sort of their mindset just basically loses it. They kind of fall for gambler's fallacy and think, well, the next one can't be a loss. And so they get into an almost like martingale style strategy with themselves and stuff and double it up, and actually they lose and lose. And I've seen people give back a whole year's of profits in an afternoon or a day. I've seen people give back, blow up accounts, all right, in a day and stuff and what have you, because basically instead of just taking three losses, taking three strikes, and you're out and sitting down and being benched for the day and going off and looking at your data and coming back, in a day or two's time, they basically fail to meet those kind of risk management protocols, and it's just not ended well and stuff. So it's we say it all the time, all right. If you are not managing risk, you're going to end up as roadkill. You are a professional risk manager first, and then kind of a speculator second. And if you don't live by those rules, your trading career will be unbelievably short, won't it?
Oh yeah. I just realized I can link in Prince Leopold again, or King Leopold again.
All right, well, okay.
Heart to Darkness is about which is Colonel Kurtz, basically, which we're
Yeah,
down to now, is based on his empire, his what you call it,
well,
place
the
he went
Belgian
after, Belgians.
fighters.
So there you go.
Well, I was, you're a treasure trove of useless trivia, Ian, and stuff. This is why we like to sit in Kyo's and chat about trading and life and stuff. There's
Yes,
always some
yeah,
bit of useless trivia that we can share with
absolutely.
each other.
It's amazing. Yeah, it's very handy as well because I live with a museum curator, so we have
Of course, yeah, yeah.
miles of trivia about stuff from the past. Weirdly enough, price was in resistance for the few days before Friday. Which I couldn't understand why I wasn't leaving it. It wasn't either going up and it wasn't going down. So,
Yeah, yeah. The
it's,
price is the
and you see
price.
that so often in the market. Like, I remember, that there's some big event happens and price just happens to be in the right place, doing the right thing.
Yeah,
Very few. The only one that I can actually really remember that sort of screwed everyone over was Brexit, because the charts were all set up for a long Brexit.
yeah.
And
I know.
then and then they all went the opposite way, like where everybody was expecting. The market was generally, I think, is expecting. A loss can give you information as well. That's one of the things. Loss, if you're trading correctly and you're trading in decision zones, except yesterday, uh, you're having a loss tells you there's a change somewhere in the market. So if you're at the bottom of a range and you're trying to go long and long doesn't work, that's telling you that the next trade up is a short. Simple as that, basically. So you're not giving something for nothing. You are getting something back if you're trading correctly as a last thing. You just mentioned fat fingers, and I love fat fingers for one particular reason. You
Once
react
more,
to them. You
once more,
react
we
to
get
them.
a look into Ian's dark psyche. But anyway, let's keep it to trading, Ian.
Yes. What it does is that as soon as you do fat finger, and I do fat finger every 2 weeks, I do some big stupid fat finger, and your whole emotional core is on show as soon as you do a fat finger because you react to the fat finger. Nearly every thing that every weakness you have, like whether you end up holding it, even though it's a fat finger, or you try and trade it, whatever you're doing, there's always something you can learn even from a fat finger because you will have a reaction to a fat finger. The most common fat finger for me is trying to let's say get out of a position. And if I was doing contracts, I one, two, three, four. We say I was trying to get out three contracts. I press it 4 times. That ends up being a sell, and that's a normal thing.
It's just to interject there, on those points you're right and stuff in terms of Mark Douglas. He talks about the late great Mark Douglas. He talks about that. It's not a loss. You view it as you've paid for information. If you view it as paid for information, once again, it takes the energy
Okay.
out of that feeling of loss, and that's what I try and get across to people. You've just paid for information, but it is upon you to extract the value out of that information, and it is about
Mm.
focusing on what the market taught you rather than what the market took from you, if that makes sense.
Mm.
Sorry, that was just
That's okay. Um, Losing systems and winning systems look the same at certain periods of time. So if you have a cluster, your winning system will look exactly the same as a losing system
yeah,
because they're both operating in the same way for periods of time. And that's one of the reasons why you have to have a huge amount of trust in your system because it will look like a losing system. And that's why you have to keep good records because you have to have that trust in your system. And that's next week's one. But that's just
that is indeed right. Ian, I should have said that earlier. Next week, TOGS 52 is on journals, data, and learning from your trades. All right. So, yeah, a useful one. And I hope you'll join us for that. Sorry. Thank you, Ian. Sorry. I should have done that. Apologies.
um, a win can be a loss and I think in some ways they can be the worst losses insofar as you work outside your rules, you get a win. It's like if you fat finger something, you do a fat finger, and then that turns into some runner just turns into be the right thing. Um, and then you start feeling untouchable, and then you start doing stupid things. So a win can be a loss. That's what I. Uh, Losses look different at different stages of your trader evolution. So when they start off first, they're almost shocking because they're threatening. Because losses are the real threats to trading. And so as you progress, losses look different. They don't look as threatening. They just look like something that happens. And I wanted to say as well, one of the reasons why I think losses are um, so threatening to traders is because we're dealing with the brain that's not designed for trading. So we're dealing with the brain that's designed to go and hunt woolly mammoths.
Yeah.
And the problem, I think I said this on one of the other podcasts as well, is that if you were a Stone Age guy and you go out and you chuck your spear at a woolly mammoth and you miss, that's up. That's annoying. That's a day without eating, and you go back to your wife, and your wife is sitting there going, "What? Nothing to eat today, Billy?" And you're no, no, I'll get something tomorrow. I'm awful sorry about that. And Chad in the next cave comes down with a big antelope or something, and uh, and then you go out the next day and you have another loss. And then you're back to your wife and she's unhappy, and then you go out the third day and you come back and she's down in Chad's cave, and you're sitting there starving, and they have to come over, and now you're a burden to the tribe, and they eat you. So there's a whole thing with losses, that losses are a loss in trading feels it's probably the same as missing your dinner, missing to hitting
Yeah,
something with a Stone Age weapon. So that's why I think that, and we're not developed to realize that in reality, most losses are just a change in the numbers on the bottom of your screen. That's
yeah,
what most losses are. If you're trading
yeah.
properly,
No.
it's just a little change in your balance. That's all it is. That shouldn't be that threatening. And if you do experience a big loss, what I tend to do is I can give myself 3 days for any big event in my life that was bad, or in fact good sometimes, but it doesn't tend to be as often. I always think life tends to throw you mean things. So I take 3 days and I can go and revel in my pain and depression for 3 days, and then after that I have to start to control my own thoughts. When you'd have those sort of catastrophic thinking thoughts, like, oh, I'm so bad at this or whatever, that you have 3 days to do that. You can do that for 3 days, and then you just have to knock it off. And that's how you get on with
And
it.
and I would suggest that at least 48 hours, perhaps even those 3 days, you shouldn't be trading at all. If you have had a bad loss or a string or cluster of losses, you'd be smart to basically just lose your trading privileges, because you probably would, if you're at a fund, or an institution, you'd lose your trading privileges until you can actually go away and do the work on yourself and the work on your data to understand, what happened there, what went on there and stuff, because you need to process it, so I completely concur. If you have had a bad loss or a string of bad losses, take a little bit of time off. Markets will still be there. All right. Your natural inclination is, as you said, you've chucked your spear and you missed it, you think, well, I'll just keep chucking spears until one of them hits. But invariably, in trading, that means you can, as I say, we can just get into that kind of revenge trading, slippery slope, spiral of doom, however you want to label it. You need to take some time to understand why it's gone, and the best way to do that is to make sure you're keeping good data of your trades, because otherwise it's all a little bit hearsay and recency bias and anchor bias all sort of place, and it doesn't really help. It has to come from data, doesn't it?
Yeah, it definitely does. One of the other things too, I think, with losses is that, especially with underfunded traders, is that money. If you're saving up 200 quid or 300 quid to start your spread betting account or something like that, and that 300 euros is, it's a significant amount of money. You've had to change your lifestyle maybe to collect that amount of cash, whatever. Because I remember talking to a guy years ago and it's down in his house, and 20 quid was a big amount of money to him. And I've talked to some of the lads from particularly Africa, like they get contacted by traders from Africa. And 20 quid is a huge amount of money to them. So you start linking it in with real life stuff. I have lost 50 euros. This is means I can't go for pizza on Friday night. And that makes the loss 10 times worse, I think. It's much harder to deal with something because now you've lost something. You've not just had your numbers changed,
Yeah.
but you've lost um
See, I would maybe take a little bit different, but then this is probably my life experience in terms of, I think perspective is a great thing in terms of. But my view would be, do you know what, Paul? You've lost 50 quid in a trade. That was pizza on Friday night and stuff and whatever. It was pizza on Friday night. Nobody's trying to kill you anymore. Nobody's shooting at you. Nobody's killing you. You took a 50 quid loss. In the grand scheme of things, it was a Friday night pizza. Just have a word with yourself, sunshine. Get a grip. You live to fight another day. You get back into the fight tomorrow and you get at it and stuff. And so I would probably do, I think it's the perspective is a key, and where you're coming from, all right, can have a huge impact on that perspective, all right. And it kind of links into a little thing you said earlier, namely that ultimately, you're getting upset about coloured blips moving on a screen.
Mm.
That's it. That's all it is. Coloured blips moving across the screen. Some sort of binary ones and zeros moving across the screen. But it has a huge impact on people. It has a huge impact, and then you have to do the work. You have to do the work yourself to unpack that and say, well, why am I getting, why am I getting emotional? Why am I getting upset? Why am I, revenge trading over what is just, a bunch of, binary ones and zeros floating across the screen? Nobody's trying to shoot me. Nobody's trying to kill me. That woolly mammoth isn't trying to, skewer me. All right, okay. It's where is that come from? Where
Mm.
does that come from? Where is that actual, that kind of the emotion and the energy from it? Where is that coming from? And that will be a bit different for everybody, and you have to be prepared to sit and unpack that and use it as a. I kind of love that stuff of unpacking it and find out what the real story is and stuff and working with that. But you have to face up and front up and do the work, don't you? There's no because if you don't, you'll just keep repeating it. You'll just keep doing it and stuff. And so it's in your best interest to basically keep the data front up, do the debrief, embrace the pain of it, and use that as I kind of channel it into fuel for your next evolution to your next level as a trader. But as I said, that might be me. I might see things a bit differently from others, but that's what makes a market, isn't it?
I was just thinking about perspective there, because as I've said many times, I used to work in the wine trade and collect wine and all that kind of stuff. Went to wine school, and so my relationship with buying wine is not the same as real money. And I went into
Yeah,
a wine shop recently enough, and they had
we know, Ian.
a negociant produced Chablis Premier Cru for half the retail price because it was the end of a they were cleaning out stuff basically in the off license. And your heart starts thumping, and then you go and you take them all, and you go up to the counter with them all, and you go, "I'll have all of these, and if you got any more out the back, I'll have them as well." And it's all, and then you spend 250 euros or something, or 300 euros or something on this one single type of wine, which is not an insignificant amount of money, but you're really happy. You're
Yeah,
going clink, clink, clink out the door, and you're as happy as Larry. Where, if you get a bill from the bin company for something, you're a bit not so happy with that. Uh,
that's
anyway, yeah,
you. That's you. I would suggest that is you. That's the value investor in you, knowing that you are buying way below
yeah,
market price and stuff, and so you immediately know you have profit. You can have equity built into that really, really quickly if you wanted to flip them tomorrow, for a profit. So I think it's easier because you understand that, whereas you might not necessarily understand how your council has come towards the size of that bill for emptying the bins, and that's what adds to the
mm,
emotional angst and the desire to go out and riot on the streets against the local council. But there you go. Maybe I'm wrong. Maybe but
yeah.
there you
I think it's just a hobby of mine. I spend an incredible. I won't go past a wine display without going through the whole thing. And I stand in front of it for 5 minutes to make sure that I don't miss something.
in,
And
in same ways traders specialize. That is specialist
mm,
niche knowledge you have that actually not only do you enjoy, but
mm,
there is value to it. There is
yeah,
value to it and stuff. There's an emotional value to getting a deal. Everybody loves a deal. Everybody loves a deal,
yeah.
and you've got the joy of getting a deal. You're flipping for money, and you're getting good tasting wine. And so you're onto a winner. I can understand.
I just think it's suburban middle class dad with a son in private school. You need to have Chablis Premier Cru occasionally for various things when you're going to somebody's house. It's nice to bring two bottles and not one bottle.
Well, there you go.
Because
Well,
I find that the average price in Dublin at the moment for a dinner party wine is about 50 quid. So, Chablis
geez.
Premier Cru is about 50 quid, and then you come with two Chablis Premier Crus, which you
Well,
paid 50 for the two of them. So
this
you're like, hey, look at me.
this podcast we get a continuously weekly stream of insights into Ian's life and into the life of a South Dublin dad and stuff.
Yeah,
South Dublin,
yeah.
sort of work from home dad and stuff. That's a podcast all in itself, Ian. I've said that. You know what I mean? I've said that they'll have you in the Irish Times and stuff. Sort
Yeah,
of mincing
it's
about,
fun. It's
pontificating.
so not my natural environment really because I come from quite a working class background and it's just not my environment.
Uh,
It's all to be down here. Even my son, sometimes he says core. I'm getting the core,
yeah,
daddy. you know, and I'm like, oh, Jesus Christ. Well, I suppose that's what I'm paying the money for, you know. A lot of traders end up like deer in the headlights
Yep. Yep.
when the loss, because the loss gets to a certain point. So they lose a little bit and they go, and then it goes a little bit further, and then it starts to get too painful for them to take, and they can't get out of it, and then they end up taking an absolutely unacceptable loss. And what I did to get around that is I put in an emergency loss. So I have a what I maximum amount of money that I could possibly lose in any one trade. So even because sometimes when I'm in a trade and I actually believe in the trade, I want to hold it, but there's a certain level where you just have to go, this is stupid.
Yep.
So I have a level of loss in that, and it has nothing to do with the charts. It is, I can recover from that loss. I can recover today from that loss. My next trade will probably recover me that loss. So it isn't, I'm not carrying it. I'm not carrying this big burden. Nice controversial one, adding to try and get out of a loss. I
Yeah.
add to losers. I add to losers a lot,
I know.
but I'm happy to do that because support, I'll just do for longs, right? Support is a band. It's not a line most of the time. So you might see that all the, you see, and new traders don't seem to get this. Um, support can be, support can be 50 points wide, you know, or 20, if it's a huge big support, if it's a huge big area, or it can be 10 points wide or 15 points, we say 20 points wide. So I have to take a, so when it comes into support, I have to take long signals. Excuse me. I have to take long signals. That's the game, right? Support that I think is going to work is in the thing and is in my plan. Then I have to take the trade signal. And because it's wider, price can sink through that and go down to the next level. And then if I was to stick to a very rigid stop thing, like you know, where in this particular trade I have to exit, it wouldn't work for some of these areas. So it sinks down to the next one, and then I'll get another long signal. I still have the original trade, and I'll just add again, and then it'll go to maybe a third one. And the biggest one I've ever done was 14 ads one day to a single trade, like where I was just sitting there and I was like, oh, to hell with it. But I got out of it. Like, I mean, I was quite happy to do it. And also as well that the volatility in the daytime, you tend to get a lot of this.
Yeah. 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 It is.
So you can get out of it. Now I've had some spectacular losses from it. Like, I mean, it's not unusual for me to lose 10% of my account in an afternoon. That's it only happens maybe 3 times a year, but it does happen. So I
Yeah.
have to accept that as part of the risk. But the thing is that it allows me, accepting that risk allows me to take trades that I couldn't otherwise take. And it would be more expensive if I had to stop at 3 points every time I went into a trade. In these areas, I could lose 9, 10 points. So if I got stopped out 3 times and maybe the fourth one works, I've 9 points thrown out that I've lost, and this trade now has to make up for those 9 points before it gives me a penny profit. So adding is generally not a good idea. And I certainly can't imagine why you would do it swing trading. But for my particular thing, it it works, but you have to accept that you're going to get a slap occasionally, and you have to be fairly. It's not martingale. You have to have a maximum amount of money that you can possibly lose, and because you don't want to, because you will get it wrong. You don't want to go down with the ship. So, you know,
Exactly.
10% loss is 10% loss is recoverable from, you're going to be working for free for the next week, maybe 10 days, like, but you're going to recover from it. But any bigger loss than that is starting to get very expensive, I think.
Yeah.
Uh,
And that's one area you and I have always differed on, isn't it? I'm
mm,
all for adding to positions, building a winning position, but that's, from a trade that is going in your way, adding, I probably it is seared in my brain from that famous photo of Paul Tudor Jones in his office in the run up to the '87. He's my personal professional trading hero. Even he had on the back of the if you that there's that photo of him at his desk, and behind him he's got that piece of paper sticked on the wall: losers, average losers. And, and maybe that's just always been seared into my head and stuff and burnt that basically. Adding and hoping you'll get out, and it's not my style. All right, I can totally understand as a scalper. You might be able to get away with it and stuff, and do that, and you have accepted the fact that once a quarter you're going to get a 10% slap in the chops and stuff and what have you, and your trading system well enough that you can, as you say, you can work for free for a week as you basically grind your way back out of that. You have the experience and the background and knowledge to know that and stuff. But I would be for new traders, I would just be very wary of going down that path until you've got a couple of years experience under your belt and stuff. It can yeah, it can lead some terrible events. And as I said, losses are there to steer you, not sink you. Your trading journey, your trading account, all right, should never come down to a single day or a single trade position and stuff and what have you. So it's you are a risk manager first, all right. So but that kind of leads us into kind of one of the elements, is because I appreciate we want to sort of move towards, because once again we can talk about this all day, can't we, and stuff. Is
Hmm.
that and talking about kind of probably one of my weaknesses is that I'm exceptionally good on keeping data, exceptionally good on doing my debrief and my review, but what I have always been poor on is kind of self-compassion in that view. I can be pretty hard on myself, and I think a lot of that is just the way I was raised, my early experiences being, in the military and working the city and sports teams, etc., and what have you. Um, I find it quite hard to be compassionate on myself. It's something I have to actively work at. I'm normally more likely to go the other way, and give myself a hard time about just not uh, upholding the sort of standards and expectations that I would have and stuff. But what I've kind of learned is that you know self-respect will sustain performance far more than self-criticism. All right. And for me, it's about finding the line on that. You do want some criticism because you don't want to be complacent or lazy or sloppy. So you do need to have those boundaries in place. But once again, it needs to be a debrief of your losses that basically help steer you rather than sink you in terms of your managing your self confidence, your self belief, self trust, your self worth, all of those elements, because that is the knock on impact of big string of losses, is that it can completely undermine your self belief, self confidence, self worth, self trust, etc., which can lead to longer term trading challenges and stuff. So it's something I had to work at. Okay, and my natural inclination is, if I had a couple of losing trades, is just literally, have a word with yourself. Well, it's just where you're playing it and stuff, especially if the trades were a bit just slop. My idea of sloppy is very different from others, but if it's not an A plus setup, okay, then I can be a little bit hard on myself. But actually, over time, I've just realised that self respect sustains performance far more than self criticism. Okay, and that you have to come to terms with that. It's just a loss, as I said. Perspective helps. It's just a losing trade. All right, it means nothing about your self worth. Nobody's trying to kill you, Paul. It's just a trade. It's just a trade. That's it, isn't it?
Mm. Actually, just quickly say with Paul Tudor Jones, it was the first time I ever became aware that there was a thing called a stock market. Really, was I came home. I was working on a fishing boat, sorry,
Yeah.
teacher, and I came home one night after working on the fishing boat, and his trader documentary was on the BBC.
Wow. There you go. You should watch that,
And
ladies and gentlemen, if you
yeah, it was
haven't.
on the late night BBC thing. They used to have
Yeah.
stuff on the BBC One or something. And that was the first time I was ever, and I found it really interesting because I mean, working on trawlers kind of super masculine activity, really. And Paul Tudor Jones would not have been exactly the kind of guy you would have met on a 30-foot half decker in the middle of the bay someplace. And I just thought he was this delightfully, to me, nerdy guy in comparison, wearing secondhand shoes and 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 making money out of doing something else. Anyway, self-compassion.
Yeah.
Uh, there's a few things I wrote down. I had just wrote down a couple of notes where you're saying that. One was it's a value judgment on yourself.
Yeah.
It's just
Yeah.
something that comes. That's a childhood thing. I think
100%.
all traders, I think, are all successful traders that I've met are pretty harsh on themselves and pretty humble. I've never really met, and the ones that I've met that are not like that tend to eventually have a blow up. Even if they are good traders. As I told a story before, there's a guy I used to know who was he was loud, um, boasting all the time, lost $1 million in an oil trade, and that killed him. That was him out of the business. Um, so I think that it's a normal thing, and I think that because what you see is that it's because it's self-responsibility as well. Is that being harsh with yourself? I always think brings in it means that you're responsible. You're taking responsibility for your actions. And an awful lot of traders that I've seen fail don't take any responsibility for their actions. You hear, oh, the market was off, or this was off, or that was off, or there's some excuse. There's always an excuse.
Exactly.
And I don't like that. One of the things I had to stop for myself was saying it out loud because your brain hears what you are saying. So if you're sitting there, because an awful lot of the time when you're trading, particularly with other professional traders, like if they're trading alongside them, you're like, oh, I suck at this. It's terrible. How am I so bad? I hear quite a lot of that actually, really often, and part of me had to try and stop joining in the sort of because I was hearing it myself. I was telling myself I'm shit at this, you know. I also think as well that people tend to take it like that sort of beating yourself past the post, sort of Christians in the middle of the 15th century or something, is it's a short-term strategy for a long-term objective because you can push yourself 2 weeks coming up to your exams in school, and you can beat yourself along for that. But trading's for life. If you're in trading, you're in it for life, and you can't do that. You will just destroy yourself, and it doesn't change the outcome. It doesn't change anything really too much. It just causes you pain. And what I did, I remember what I did with that at one point is that I had to sit down and once I had to commit to trading first. That was the first step. I say, right, this is what I'm doing now. This is a big part of my life. And then I had to assess, did I trust myself to do the best that I could do in every situation? So every time I lose or screw up, I take that up. I go like I'll have a little word with myself and go, no, Ian, you'll have to do better next time. But I also have to know that I trust that I'm trying to do the very best that I can possibly do. And there isn't and then that allows me after that first couple of minutes of going, oh yeah, to go into self-forgiveness really. Because you kind of have to be, I think to do anything in life, you just have to be horrendously self-forgiving. Because and why shouldn't you? It's like I was talking to my son one of the days and I was saying, what's the cost of self-belief? At the end of the day, you're not carrying anything extra. If you don't believe in yourself and you don't believe in because I'm very big thing on confidence with him. If you have that, there's no cost to be liking yourself. There's only benefit. And I kind of so my own passion for that is, yeah, I have that moment as soon as something goes wrong, and I'm like, oh, you idiot. And especially if I've contributed to it. I mean, even though yesterday I was trying to do something new that I hadn't tried to do before and it went wrong, and I was carrying that all evening. I woke up at 6 o'clock this morning going, "Rrrr." But one of the first things I remember saying afterwards is I followed my plan, and that's all I could do. And I know it's another great thing. I know from back testing I know from trading it that that's eventually going to work because I know it, because the figures are there. It has to work. It's worked for since 1928, so or 1929. So why should it not work now? All of a sudden. So
Exactly.
I know that eventually, if I do enough of them, if I do 100 of them, which is my aim to do 100 of them, it'll take me 6 months to do that because they don't occur that often. Um, that eventually it'll work. It'll come out the other side of it, and it'll be a great thing for me because scalping is great, but scalping's really hard to do at scale. Because you have
Yeah,
slippage
yeah,
and you know it's not an easy activity if you're doing it with a lot of there's the mental side of it, any mistake you make, adding as I just mentioned, because one of the things I have to keep some cash in reserve to add if I need to. And if you're trading at if half your margin is coming in straight off, you're not going anywhere. Where with these longer trades, you have a absolute stop, and you can just it's maths problem. It's a maths problem. So we'll see how it
there you go.
goes.
There you go. All right, I think that's a good place for us to draw a close,
Yeah.
for a session and stuff and what have it. So
Mm.
as always, we're never short of being able to talk once we get started on the subject. So listen, just a reminder. Thanks very much to everybody who subscribed. If you haven't done, please do. Kind of the likes, the messages, comments we get. Okay, we really do appreciate it. Okay, it does. We do appreciate the feedback, and it's great to hear that you find it useful. Next week is TOGS 52. As I said earlier, it's all about journals, data, and learning from your trade. So they kind of links. These last few sessions we've always had to try to build on each other. But I suppose in terms kind of to draw us to a close, yeah, losses hurt. They always will. All right, welcome to trading. But when you handle them with structure, honesty, and self-compassion, they can become your most valuable source of professional growth as a trader. So, um, every great trader you know or you admire has built their edge on learning from the pain, not hiding from it nor avoiding it. Okay, it is part of trading. All right, it's part of the game. Welcome to trading. Anyway, thanks very much for making it to the end. Thanks very much for joining us, Ian. Thanks very much. Okay, for another interesting conversation, and to all of you, I hope you have a fabulous trading week, and we'll look forward to speaking to you soon on the TOGS Trading Podcast. Trade well, everybody. Cheers.